Now, for some analysis, let's bring in David Dietze. He's founder, president, chief investment strategist at Point View Wealth Management. He's joining us from Summit, New Jersey today. David, these 1 to 3% swings from day to day in the markets making some investors uncomfortable. But do you think it's something that investors just have to get used to?
Well, certainly it's no surprise that September is so volatile. Certainly investors are bracing for that. And of course, we are coming up to a presidential election. Is highly contested. There's tremendous uncertainty as to who will become our next president. Of course, the Senate of the United States is also up for grabs too. So that's adding to the uncertainty on top of we're seeing all sorts of, COVID outbreaks again in Europe, in Asia, and also in many of the middle states in this country. So people are definitely on edge. But to put it in perspective, this is a market that's been up nearly 50% since those early March lows. Obviously, it doesn't surprise anyone to see some retracements. Nevertheless, it is nerve-wracking. The NASDAQ is now firmly in correction territory, and it was so frustrating today because we had a nice day yesterday. We started off on the right foot, and then we gave it all back and then some. So it's people are frustrated.
What's the one thing you're looking at in trying to decipher whether this stock market decline is something that we're going to see for a longer time to come?
I think the most important thing to look at is developments on the health front. Today, of course, we heard great news from J&J. They're launching a phase 3 trial on 3 continents with 60,000 people. Certainly, no matter how pessimistic you get, if someone announces anywhere in the world that they have a vaccine that's going to work with minimal side effects and it can distribute it quickly, that market's up 10% before you finish your cup of coffee. The other thing to look at also is testing. Testing actually may provide more comfort to people because, unfortunately, a lot of people won't take the vaccine right away. But if we could have a quick, inexpensive tests so that people coming into an airport, a sports stadium, a movie theater, a restaurant knew that everyone else around them was safe, that would jumpstart commerce. So those are the key things to look for.
I just want to pick up on your point earlier about contentious election, a Biden presidency. What do you think that's going to mean for the stock markets? Does it necessarily mean higher taxes? Could it also mean a good trading relationship between the U.S. and its major partners?
Well, so the Republicans say the economy is going to completely come undone if Biden wins. And of course, the Dems say the same thing if there's more, if Trump has a second term. So the concern, of course, is that Mr. Biden has talked about higher taxes, in fact, reversing at least by half the big corporate tax break that was a signature bill passed under the Trump administration. But I think the reality is, first of all, history. History actually shows that markets do better under a Democratic president, particularly if you have the opposition party controlling at least one house in Congress. I think it's going to be tougher for the Dems to take over the Senate. Second, of course, the Federal Reserve is saying we need more fiscal stimulus. Nancy Pelosi of Biden's party is saying we need more fiscal stimulus. So I don't see Biden coming into office and immediately raising taxes. That's not what makes any sense at this point. Furthermore, we may have a little bit more trade stability under Mr. Biden, and also the Dems, including Mr. Biden, are more likely to launch big infrastructure spending, which would be a great shot in the arm and spur the domestic economy. So I think there's reasons to feel that we could be okay with a Biden presidency.
Okay, if we take a step back and we look at worst case, if we don't have that fiscal stimulus from politicians in Washington, is that going to matter so much for the markets, though? Because with interest rates at record lows, where else do investors park their money if not in the stock markets?
You are so right. The so-called Tina effect. There is no alternative. Nevertheless, of course, people do want to preserve capital. One thing that was disturbing today was we were seeing some tremendous outflows from the high yield market, and spreads are starting to widen there. That often is a canary in the coal mine. On the other hand, as you point out, we've got the Federal Reserve that's clearly all in terms of backstopping, and could certainly go in there and start purchasing junk bonds as they have before to stabilize things. I think the worst thing that investors should look for is if we wake up on the day after the election and there's no decision. And it could be even compounded because now, of course, we're down one member of the Supreme Court. There's just 8. If the Supreme Court, like in the Bush versus Gore race a couple decades ago, has to ultimately decide who won and they're divided, now we have problems. That's the bad news. The good news is it's not going to go on forever. Neither is the coronavirus. So if you have a 6 to 12 month time horizon, do look for well-run companies, low debt, good cash flow, and start to nibble as we do see pullbacks.
Very optimistic there. Thanks so much for your insights. David Dietze, founder, president, chief investment strategist, Point View.